time for another roundtable today. We've got Jack, Fausto, and Roger Scott. Is Roger in yet?
I'm right here. Hey, guys.
There he is. All right. Awesome.
Hey, Fausto. Hey, Jack. How are you guys? Good morning, everyone.
How are you? Hey, Fausto.
Good.
Hey, guys. Appreciate you guys being here today, joining us. I know Jack and Roger, you guys have all been on Roundtable before. Fausto, I believe this is your first time. Why don't we just kick it off with why don't you take a couple minutes here to tell everybody about yourself, a little bit of experience, how you trade, how you view the markets, that sort of thing. And then we'll kick it off.
I think you're muted, Fausto. You're not muted, but we can't hear you.
Well, he's a very handsome guy that's been trading on a long time.
Yeah.
While he's figuring that out, guys.
Yeah.
We'll speak up. Fausto, just speak up when you got.
There we go. Is that all right?
Oh, yeah. Now we're talking.
There we go. I got to tell you a funny story. So I had my kids. I had my son use my touch around my computer, and all of a sudden he started moving everything around, and my mics are off, and everything is just down. So I just had to fix that.
It's all good. We got you here. How are you doing this morning?
I'm doing good, man. It's great to be on the show. This is awesome. This is amazing.
How's the weather in New York City?
It sucks like everything else. I want to be with you guys down in Florida when I was just down there. I'm going to be there next week, thank God. Looking forward to it.
Nice. Looking forward to seeing you soon.
Yeah, definitely. We got the on-site class that we're doing down there. We got a bunch of all my advanced traders coming, so it's going to be a lot of fun. They're looking forward to be on the beach and hang out,
Yeah, looking forward to catching up with you. It'll be fun.
Definitely. How you doing, Jack?
According to all the comments, Fausto, everybody knows who you are, man. So I guess we can skip the introductions. Yeah. So all right. Hey, so let's why don't we dive right into it here? I know we got a lot to cover today, and we're pretty much a little bit more than halfway through earnings season. Would love to kind of pick you guys' brains, tell me what you think about whether or not how this earnings season is going, and this tech rally. Are we near the end of it? Has it got legs? What do you think, Fausto? Why don't you start?
Well, listen, there's been a lot of good stocks that are moving regarding our earnings announcements. I mean, you hear what happened regarding with all these layoffs that are going on right now. I was actually talking to my son this morning who just got out of college, just graduated, and he's like, they're all like thinking like they're going to get the schools like telling them they're going to get all these $1 million jobs and $200,000 jobs. Meanwhile, he's not getting calls from anyone because the jobs that he's looking for that he was told he's going to get, he's not going to get. And you can see all the people they're laying off. But like, I don't know. I think the thing that I always learn as being a trader is that layoffs are actually good for a company because that's the most expensive, their source of revenue that goes out. I mean, that they have to spend out. So it actually will help them out a little bit. I think they're just going to get more lean out there. Now, how's that going to help the economy is a different story. But I don't know. Like I said, you heard Apple just booked their first loss, but meanwhile, the stock, did make a nice little move from their last earnings. So I'm out on the fence. I got to see what's going to happen in next month or so with all these layoffs.
Yeah, the reactions have been pretty so yeah, there's a point at which on a company specific basis, like layoffs are good because you're getting more lean, right? And it's only when they start cutting into growth and prospects like that it starts to hurt. And it's a signal of the economy, but for the companies, the reactions have been pretty strong so far. And there's no doubt that, tech has gone so far. They had so much money that they probably got way over their skis in terms of hiring that these are healthy moves and an important part of the cycle of growth for tech companies. So I can see that. Roger, what do you think?
Well, it's interesting what Fausto said. I like his point of view in terms of waiting to see. I'll tell you my point of view. I have in terms of earnings. Let's start there. Earnings so far. This is the weakest in terms of expectations that have already been beaten down to death. This is the worst and the lowest, I think, in the last 6 seasons that we've seen expectations. So they're not, even with the weakness and all the revisions, they still can't beat it. A month and a half ago, we were looking at negative EPS of 1.6%. As of this morning, we're now at 3.1%. So EPS is going down. I don't care what the government is going to do. If EPS is going down and not up, you are not going to see higher prices on shares over time. The most fundamental basis of companies is they have to make money. And they have to make more money. And unless there's something I haven't learned yet in 29 years, if companies are not making money, they're not going to be moving higher. All estimates have been revised lower now till luckily, I would say probably in the best case scenario, third quarter of this year. So I think this rally, 9% in January rally that we're seeing, I think it's complete nonsense. I think it's doing everything possible to sucker in everybody and their mother into the market before we head down again. Now, am I a bearish trader? Do I think the world's coming? No. I'm a bullish guy overall, but I don't see anything. I don't see any clarity in sight. Also, the Fed said yesterday something very, very carefully. They said, I was listening. They said, we're still not at our target. Our target's going to be 5.4. So they could say deflation, we're moving lower, all they want. They're still going to be persistently keeping the gas pedal on. We're still going to be in an inflationary environment till we're at 5.4%. And if that happens, and if earnings revisions keep going lower, I don't care what happens, we are not going to see a higher market. But with that said, I will say something that I've noticed for the first time this quarter. In terms of earnings, especially the big FANG stocks, they're not moving based on what they're making. They're completely moving based on their forward-looking statements. Take a look at Apple, take a look at Google, take a look at Meta. All of those stocks, one went up, one went down, one went positive and went down, one was negative and went down. They're all going based on how lean they're going to be, as you guys both mentioned in the beginning of this conversation, of this talk, and how much cash flow they're going to have. Investors are looking right now at what companies are doing to moving forward. Everybody understands where we're in, where it's already priced in for the most part. So you have these two factors right now of how much is it going to get worse versus what's already priced in. That's really where we're at. And I don't think we're there yet. I think we're pricing in right now 4.8 to 5.2%. I don't think we're pricing in 5.4, and we're going to 5.4.
Yeah.
That's my 5 cents there.
Yeah, and I think here's the way I think about it: as the stock market, as the S&P, let's just pick a couple numbers, was going up from 4,400 to 4,800 on the way up last year, or the year before last year. That was based on earnings that were growing and projecting those growth out several years, right? An acceleration in that growth. That is no longer the case, right? That is not going to be the case for at least a couple of years, right? It's going to be hard to figure out what that reset is going to be. So, can the S&P get back up to 4,400 from here? I think that's basically impossible. It's bumping up against 4,200, but no, I'm with you. I think the earnings momentum is against it, and you've got much higher discount rates. So those fair values are much worth it. Stock making $100 per share, let's say last year, and that same company making $100 per share this year is necessarily worth less because the discount rate is way higher. So anyway, that's I see you on that.
And just one last thing, let's talk real fundamentals. Let's talk Warren Buffett mode, okay? EPS is not where it should be right now. EPS is still not discounted enough. It can go down to 14, 15. We're not there right now. And that's just fundamentally speaking, stocks are still overpriced. I'll get off on that tangent. I want to hear what Jack has to say. Always interested in what Jack has to say.
Regarding earnings?
Yeah.
Uh-huh. They haven't been good, but traders, January was like seller's fatigue. The only reason the market went up is because people were just tired of selling, and then it was like a soft belly that you could probe and push it higher and higher and higher and not find resistance. Yeah. But what I saw, which was really amazing, and this is why I think traders want the market to go up, but it's not going to cooperate. And if you watched Microsoft last week, when the market closed, they announced earnings after the close. I think it was Tuesday, and the stock closed around 242. And within minutes after the close in the after hour session, it went up to 254 when the number actually came out, right? So what's happening is the data comes out, and then during the guidance, when somebody opens their mouth, that has a whole nother shift in the direction of the stock. So Microsoft's up 254 in a matter of minutes after the close. The number looks good compared to traders. Then Amy Hood gets on. She starts giving guidance. And the minute she opened her mouth, the stock went right back to 240 from 254. Yeah. So it's whatever the number is, it might not be as bad as feared. And that makes a lot of traders want to get bullish. But as soon as there's guidance, this guidance is ruining any extension or any rally off of any kind of earnings news. So it's I'm impressed with it, but I am impressed with how much aggressive. There's still a lot of aggressive people want the market to go up, but that's not happening. So we're going to go into a sideways, choppy market that I think is going to rip people up bad until, like Raj says, the third quarter. But we're entering a really, really tough market here. Sideways choppiness that is just rip.
And I want to pick up that choppy market. That's some good comments there, Jack. And I think your comments regarding how people react, how the markets are reacting to comments, right? So they reacted that way to Microsoft. And yesterday, when the Fed Powell, Chairman Powell was speaking at around 12:40, right before he spoke, the S&P ripped up higher, 45 points. He started to talk. It came down 80. So it's like going through a cardiac arrest, right? There's no it's just a lot of face ripping going on. I hear you on that, and we'll talk about the choppy markets and how you respond to that in a little bit. Scott, you were about to say something. I'm sorry.
Oh, I was just about to say that this market, it's really interesting how these markets are investors. Every time there's slight hope, they become so bullish, so fast, so quick. Yeah. And then all of a sudden they just turn on a dime. And I agree. There's a lot of people really want this market to go up, but it's not going to happen. All I wanted to do was I just wanted to share real quickly, just to add a little context to the mix. I wanted to show you guys the chart of we're talking about choppiness. This is the Dow Jones the last 3 months. I mean, it's exactly what you guys are talking about. It's just. Which is why it's making it very difficult for sector rotation strategies.
Everything. There's no follow.
Everything is hard.
Right.
Everything is hard.
Right.
Yeah.
Right.
Yeah. I mean, I suppose the only smart thing to do is to sell volatility or premium, for the last 3 months. Just sit there. Which, Jack, that's right up your alley, man.
That's what this guy's doing.
That's been good stuff. Selling calls.
That is. That's great.
It's been amazing.
Awesome. All right. Okay. Well, that's a good one. So here's a kind of a meaty topic, right? I know it's on, here within our organization. You see it all the time now. Everybody's talking about it, and it's AI, artificial intelligence, right? And we'll avoid any talk about robots and labor implication. Well, I mean, maybe not we'll talk about robots. We'll avoid robots taking over the world right now, but kind of talk about the near-term implications. And Fausto, I'd love to, if you've got some thoughts, I'd love to hear them too, but let's just kind of open up. I mean, what do you guys see happening in the AI space? There was a lot of companies that came public over the last 2 years with very different business models. Now you got this Chat GPT, which was open free, and that's really having more of an impact than any of the other technologies, just within a span of 2 months. It's truly remarkable, right? And the reaction out of the panic out of Google has been palpable. But let's Fausto, what do you think about this AI trend? What are you looking for? It's such a big topic. I don't even know exactly how to frame it. So just say something.
No, it's
oh no, did we lose him? Oh, there he is.
I've been actually, it's funny too, because we've been trading it all morning, the stock. Okay. So we've been trading the stock for the past week. I just want to show you something really quick over here, but like.
Oh, you're talking about C3 AI in specifically?
Yeah. C3 AI is like really, it's really like.
I'm thinking like artificial intelligence in general, but let's talk about it.
So some people don't realize the company just went public not too long ago. If you look at this chart right here, and you could see it, that the stock right here is actually going back as far as I can, but you could see it right here had that big gap. It was at $180 stock. It just started moving. And, getting back to what you mentioned earlier about AI. So my kids told me about AI all of a sudden started coming into it because they were graduating high school, college in, and they were doing their finals. And so I'm thinking about it. I'm looking at this stock. I'm like, wait a minute. They started doing this around December, right before Christmas, and all of a sudden I start seeing the stock starting to go up. So the word's been getting out. Now AI, like, I don't know if you guys use it. This thing is pretty scary how it works. I mean, I know that GT actually just started charging for it. I was actually on this morning to subscribe to it, to get the account. But the stock has been on a really, really good move, and you could see it right here. Just this morning, we've been day trading this stock, and it started around $24 at 28. The stock had in one day, a couple of days ago, went from 21 to 28. And there's a couple other ones actually trading side by side. There's also another AI, a BBAI stock, and there's another one too. I thought I had it up here, but I took it off. But they're all moving. And it's funny, the big thing about we teach on day trading, what you learn about day trading, we're like the Marines, I tell everyone. We're like the first ones that go into the market, and we get to see what's going on. All of a sudden, once you hit that industry, they all move. What's also pretty cool, I want to show you here too, and this is something that, which we call Jack knows very well, because we come back from basically it's from the same breed. So what we're looking at here is I'm showing you orders out there. Now, these are orders that we're seeing in the future, okay, which are not like, these are limit orders. See, a lot of people focus on the past. I focus on, I'm a market maker, so I look at these orders, and you could see right here that there were these big orders right here since this morning, and they started showing up right around 9:30 this morning, and you see what's happening. These red lines, it's called a heat map. These are orders that were out there, and when the stock started, these orders started getting taken out. And you could see these orders, like there's an order right now for 11,000, 65,000, 70,000. As I work up, 74,000 at 31. These sellers are getting done. So obviously someone has an interest in it, okay? The street likes it. So I know we're talking about earnings and everything else, but sometimes, as a trader, we kind of go with what's moving, these next couple of days. What's the big talk about? And I'm glad that you brought it up. It's funny you talking about it, but this is what's moving right now as we speak.
Interesting. Yeah. No, lots of ads. Roger, Jack, what are your thoughts on it?
Jack, do you want to go first? Should I go first?
Go ahead, Raj, and then I got a little thing for him, but you give him yours.
Okay. Folks, I love Jack. Jack is like the most straight up, straightforward guy. I love hearing what he has to say. He's not going to give you any no monkey business, right, Jack? No, none of that straightforward stuff. I love it. So here's my 5 cents. And this is great. I'm glad we're having this conversation, because it's funny. I told Matt, my assistant, to remind me, because I wanted to have this discussion with my room. I have a VIP room daily at noon. And today I was going to talk about it because I've been getting so many emails from people asking me about very broadly, what do you think? How do we invest? So I'm going to tell you guys a little story. Okay. And this story is very powerful in terms of this company. Sometimes things come out and they're so good that it makes it very hard to take advantage of it. To give you a really, really good example was back in the mid to late 90s when DirecTV came out. When I first heard about DirecTV, I got so excited. I couldn't wait to invest in it. Because I knew it was going to be such a it was a no-brainer, right? It was new technology, DirecTV. Everybody wanted satellite. Cable was old back then. We didn't have fiber optics, all that stuff. So I did my research and I realized that by the time I got involved, it was already bought out by Hughes, which is one of the biggest companies in the world. And DirecTV made up like 1% of their market share. My point here is, I think over the next couple of months or 6-7 months, most of this AI technology, and I think it's amazing, it's going to be, if not already, bought out by the big boy, the Google, the Microsofts, the Teslas, and you're not going to be able to invest in it on its own. It'll be absorbed, and any new company that's involved with it will be absorbed as well. This morning, Google and Microsoft announced that they're going to be applying this technology into their browser. From what I'm understanding, Google, I still call it Google. I know that they changed the name of the company, but Google is Google. They're scrambling right now because this AI could totally change the whole browsing experience. So here's my point of view on it, okay? I think in the big scheme of things, much like cryptocurrency, I think it's a game changer for the world in terms of technology, in terms of what we're doing. I think it's another brink in technological advancement. But I think right now, it's becoming gimmicky. It's becoming like Bitcoin was 2-3 years ago, where people are going to be, ooh, it's AI, we got to get into it. I think it's like a calculator. Calculators are great, but what's a calculator without a person doing stuff with it? I think it's a great technology. It's making a huge difference in companies that do it, research, copy. It's another tool. And I think we have to take it with a grain of salt and look at it like Bitcoin. I think that right now it's kind of like the gold and the shovels. Right now, it's the old gold play, and we should be looking at the shovel play. Now,
I like that. That's great.
I'd love to hear what Jack has to say, because we have not discussed it, but I'd love to hear his take on it. But that's my point of view, and I'm sticking to it.
Great. Love it. I love it.
Not so fast,
Jack. What do you think?
Not so fast, my friends. Listen, this AI, that is the most ripe potential for shenanigans that I've ever seen. Okay, I'll just tell you this: like, people think the stocks in AI have been on a tear. Check this out: a sector index of 73 AI-linked cryptos compiled by data group Crypto Slate says it's up a remarkable 87% in the past 7 days. A little token called Net is up 675%. Another one called Artificial Liquid Intelligence up 500%. So when the crypto bros go first, they're good at one thing and one thing only, and that's creating bubbles, right? And this AI stuff, any company, I've seen companies now in guidance, they're using the word AI more than ever before. Everybody's throwing the word AI into their guidance on their earning. I got AI, you know what I mean? What is AI? But Chat GPT, that is junk, man. That thing can't tell you anything that happened past 2021. It just searches the internet. How does it make any money? It doesn't make any money. So I don't know. I'm not as bullish as everybody else is. But the one thing that I do believe is there's going to be some shorting some of these stocks. Going to be the best shorts we're going to see in 2023 when they get all hyped up. Just because they got AI, that's not a reason for the stock to go up. Right. You got to be able to monetize that AI, not just have it. And Chat GPT, it doesn't do anything, and it's kind of lame compared to what's out there. I don't think that I think Google's playing a good PR game with acting like they're all whipped up in a frenzy that they're late to the game. They're on the cutting edge. It's just going to be how they want to roll that thing out, and where they can make the most money off of it. But it's ripe for a lot of scams, and I would have to see how AI actually contributes to revenues before I jump in on anything. But I can't wait to short some of this stuff.
Well, that's great. It's coming. Listen, they're starting to charge $20 for it now. So I mean, listen, if you introduce anybody to it, this is the only thing I kind of disagree on, that it's a pretty scary tool. I mean, colleges starting to use it, professors starting to write on it. I mean, it was free, but they're starting to charge for it now. So just like Jasper, listen, this is not like Carvana. Like I was trading Carvana for the past couple of weeks, and we had this big rally. Stock was almost a $400 stock, dropped all the way down to like $7. I mean, that's a short squeeze. But I don't know. Listen, the only thing I know about short squeezes, and you know this too, Jack, because we trade very similar back in the day, the faster they go up, the twice as fast they come down. Yeah. So if it goes up nice and steady is one thing, but like I said, you get these buying frenzies, they go up, they take off.
Well, let me just
parabolic. They're going to be great. I can't short the coins, but that would be the great stuff to short. But the stocks will follow, and there'll be some good stuff too. It'll be another bubble. America's great at creating bubbles, and AI is the perfect bubble. So that's my
I agree with 90% of what you said, Jack. I think for the most part, you're 100% correct on most of it. But I will tell you this. and I don't know enough to get into the nitty gritty of what. I just know from the broad perspective. I'm talking about the 1,000 view from the top. The macro view. We're starting to incorporate some of this AI stuff, like in copy and research in our office, and we use that Amy Broker program. It already knows like how to back test certain things in there. From what I'm seeing in the hands of a right user, it's a very, very powerful research tool. Again, you notice the key word, in the hands of a very powerful user. So I am seeing a really, really powerful way to use it and generate use from it. Again, how do you monetize it? How fast is it going to be? That all I agree with you 100%. But in terms of practical application, I'm actually seeing it firsthand in our company, and it's some pretty
scary.
I don't even know
how to write
impact.
Python. Go ahead.
And I had the
go ahead, Jack. I'm sorry.
A program in Python. I just said, hey, write me this code. I want it to do these things similar to the algo we were running with S3. I asked it to write me a program in Python that does what we had for S3, and it'll do it. It's scary good stuff, but what is the value of that artificial information?
Right. That's
Well, I think the value is scale and speed and comprehensive grasp of the facts, right? And there's the productivity that it allows for an individual, right? And that displaces that. So the implications are it displaces people that coding is no longer a skill. Asking AI questions how to code will be the skill in 5 years, right? And you can make that same kind of statement about across a lot of domains. But then again, what's that do for productivity, right? Is it going to be some massive productivity boost? Heck, the entire mystery of the 80s and 90s was we never got the productivity actually ultimately went down, right? And that's because it gets spread out. Everybody gets a little bit more productive on a marginal basis, and there's no massive. It's not like everybody all of a sudden is eating milk and honey, right? It's if you weren't productive before, it's hard to be productive afterwards. It's a tool that you're going to lose, like Roger was saying. And what you need to look out for is the people that are going to be the most skilled at using those tools, right? And how those tools can be turned to their advantage, particularly, right?
Just to give you guys just practical stuff, we use a program called Amy Broker to backtest. We started and again, I don't know which one or what. I don't know all the details. I'm not there yet. I'm waiting for the 101 class on AI. But Matt, my assistant here, he started asking the program Amy Broker questions. This thing was giving it answers. I was like, oh my God. We had a session here about copywriting because we have copywriters doing research. They were showing us how to ask distinct questions, and it will definitely save you time. Again, what's that worth? The value of all? I don't know, but in terms of usage, I think it's amazing. In terms of capitalizing on it right now, I think it's crypto. I'm smelling crypto. I'm 300% with you, Jack, on that. In terms of all of that, I think you're 100% right.
That's right. How do you turn it into money? That's the big question, and it's not clear at all. So, Jack, let's go back to your questions, right? Or something you brought up earlier, like the markets are choppy. So that was a great discussion. Thank you, guys. It's an open. It's so unknowable right now. It's amazing. But yeah, let's talk about this choppiness in the market, right? How you're dealing with what are there catalysts that any of you see out there that might kick the market out of this? Because we're kind of in this, other than following the Fed, we're kind of in this hangover right now of everybody following the Fed. And then unless we got the crack cocaine of an announcement coming on, within that week, the markets don't know what to do. So is there anything that's going to meaningfully kick us out one direction or the other of this little orbit? Are we going to stay here? And if we stay here, what do we do about it? Go ahead, Roger.
Well, that's a fantastic question, and unfortunately, my answer for you is there. I don't think the market I don't think there is one right now. I think I think most of the catalysts are to the downside. So, are you asking about a catalyst to the upside or any type of catalyst? Okay, well, I think here's what I think is going to happen. I think that the rally that we're seeing right now is going to start waning away. I think earnings are going to be, after this week, the majority of earnings are out of the cat is out of the bag. and there's not going to be any major stimulus. And then I think what we're going to see is we're going to see the core CPI number start not getting lower as investors expected, and the Fed remaining, keeping their foot on the gas pedal. I think I don't think there's going to be one major catalyst. I think the hope, I think what's going to happen is the hope that we're seeing right now is slowly going to die out, and we're going to be back where we were 4 months ago, 5 months ago. I think that's what's going to happen. I don't think it's going to be on a positive note. The war could end. Don't think that's going to happen. But I think the most realistic thing is actually lack of a major catalyst and lack of a surprise. And I think all the folks that are really bullish right now are going to really, really start saying to themselves, it's not there yet. We're not here yet. So I think it's going to be lack of, I think the catalyst is going to be the fact that there isn't anything that's going to just kind of trickle in.
No more buyers.
No more buyers.
No more buyers.
I think,
no more to support it.
It's going to.
Yeah, that's good. Jack, what do you think? And then Fausto, I want to hear how you deal with it. And then I know you got something to share with us. So, Jack, what are you doing here?
I think it's going sideways. I was out on the Gulf of Mexico yesterday after being on the Atlantic side of Florida. And the Atlantic side, the waves are pounding. You go out on the Gulf and it's just barely lapping the beach. And that's kind of how the market is. There is no catalyst. The only catalyst I see is China taking over Taiwan. Outside of that, it's the most boring time in America I've ever seen in my life. There is nothing going on. It's all quiet, really quiet. So that's the only thing I could see happen. China goes in and takes over Taiwan. They're not floating those balloons over here for nothing. You know what I mean?
Yeah. And we can't trade, and that's impossible to trade, right? You have no idea. I mean, and that's the craziest trade right now to put on is the short because of China invades. You have no idea. So,
but I would wait until after the fact and just react to it, not try to.
No, that's great. That's great.
I see nothing happening. I see just a calm, flat, little soft market, going along until the first company really turns it around and makes some better earnings, and that might be the start for the rest of the stuff. But it won't have anything to do with the Fed. These companies will figure it out. They'll have to pass on their costs to the consumer, or they'll have to eat it and deal with supply chain headwinds and all that other stuff. So I just see it going nowhere. But that doesn't mean there's not money to be made. You just have to shorten up your horizon on your trades, maybe take a couple bucks instead of making 10 and selling premium. That's, people are still betting on options like crazy. And selling premium is never going to go away. It might not be as high as it was when the market goes sideways, but it's for me, it's the biggest moneymaker.
And that's interesting. And then all of this, I've been kind of confused with all this volatility. You're not actually seeing it in the VIX, and you're not seeing it in option premiums. And there's some speculation. I've read something the other day. I didn't quite not exactly sure how it's connected, but all this 0-day trading options. So there's a massive amount of 0-day expiration. So the S&P has options that expire every single day, right? And people are out there trading them that expire at 4 o'clock that afternoon. There's a lot of money piling into those.
Loading.
And, the argument was that that's a muting volatility, the way implied volatility is reacting. I don't know, but the dynamics are very different, right? Because of that.
The dynamics are very different with that. The zero DTE, 0 days to expiration, the volume on those has more than doubled. Going into this year, that's been, even professionals are really getting into that now, trying to turn on some kind of credit early in the morning and then close that trade out before the close, or letting it expire worthless if the options are out of the money. But I can't believe how much that 0 DTE options volume has increased. And that's like daily traders. That's a beautiful thing. But, I like to do it on the week.
Yeah, no, that's right. Okay. Hey, Fausto. So for everybody, I know you've got something to share with us, and it's probably very relevant to these choppy markets, right? We've got, I used to be a market maker back in the 90s. You don't care. You just got the bid-ask spread, and you got your axe to grind, and you work it, right? And so I think, why don't you tell us about that? I think it's something perfectly suited for these kind of markets, and people could learn a lot from it. So let's hear it.
Yeah, well, it's pretty funny but we we will all probably raised the same way as traders. We all start out somewhere. If it's that you're a broker and then you get into the trading industry and everything else. And one of the issues that everyone here has got to realize, and I think we all could agree, you know, being a panelist, that everybody's always thinking bullish. Like, and we all think like we have to swing trade, and we're worrying about like because we all have IRAs. We have but what makes, like, there's a good thing and a bad thing that what I personally do with all my instructors and my traders is that some people get really scared. They think of this word day trading, and they think like, you know, ooh, you could lose all your money. You know, back in the .com days, if you remember, you know, because everybody was getting into it and stuff like that. But they really were not day trading. There was swing trading. They were investing. But you have to understand, like, everyone here is mentioning about we're going into like we're a sideways market. And yesterday it's pretty funny because my kid, you know, my kid does wrestling, and you know, and obviously all the parents where I live in, they're all in the market, and all ask me, Fausto, what's going on, like what's happening? And one thing that I noticed very different about this market, we've been through everything, the financial crisis, COVID, you know, the internet bubble. I mean, I can go on and on and on. Hurricane Sandy. What's weird about this market is that like those markets took a huge dip, right? And then they bounce back, right? But the whole idea is trying to get on the bounce. This is not doing that. This is like something that's like a prolong. And, you know, it's like when you look at a chart and if something keeps trading there for a while and it's not going anywhere, that's not a really good sign. And obviously with inflation and everything else, it's trending down. So what helped everybody here, that the reason why I'm here is that, you know, you have to take trading very seriously, because when you wake up tomorrow and you saw what happened yesterday, you could be like, damn it, why didn't I sell it yesterday? Or shoot, why didn't I see that coming last week? You have to pay attention. You really have to pay attention to what's going on. And you can't go out there and put all your eggs in one basket because you're going to blow it up. So, you know, one of the things I like to do is I want to invite everyone here that's in the trading, you know, that's listening in, to come and see what it's like to be in a trading room. Like I started, I'll show it to you really quick right here, but like, I'm going to invite everybody to come into this room. And, you know, and you could see these are all on the left, everybody here. This is my staff. These are my instructors. These are all my traders in the room right here. They're trading live, okay? And, you know, I would say probably 20 to 30% are in there at a time, because people like around the world, some trade the morning, some trade the afternoon. But like, you know, the key is it's not about teaching you and telling you what to buy and sell. It's to teach you how to stop losing money. And that's everybody's issue. Like, everybody's in a trade. You want to know, how did you get into the trade? How did you find that trade? Where did that trade come from? And, you know, you have to surround yourself with a team. All of us are market makers, right? We didn't just work for ourselves. We had to work for somebody. And we had to have somebody tell us, you know, they expect us to do well. But they want to make sure that the only time they spoke to us is when you screwed up, right? So you made a mistake, because that's what they're paying for. They're not paying for you to screw up. They're paying you to succeed. So I just want to go over a couple of bullet points and just kind of show you exactly, you know, the strategy behind trading, what we look for. And like I was just talking to you and how this whole conversation came up, because everyone always likes to talk about earnings, right? But what about industries? Like, we just talked about AI. I was freaked out. I didn't think we were planning on talking about today. I'm like, holy crap, I'm actually trading it right now in the room. We've been trading for the past week. How could you have gotten in those and see the future ones that will come and be affected? Like the next COVID, what to look for with COVID stocks are moving. You know, you heard the president talk yesterday. Did he leave any hints on, you know, well, he did leave one hint that he said he told the oil companies they got another decade. So that could be something. But you got to be prepared for this. So we actually scan the market. And every morning, you know, we'll go through our big percentage gainers, and you'll see things up 50, 80, 100%. The stock's today up 200%. And you're like, how did you find those? Where they're moving? I mean, they're there every day. You can't get them all. I mean, you could see just over here, but like there are stocks that are there that are part of an industry that are going to move, that are going to show up, and you'd be like, oh, you know what? Tesla's moving today because EV's taking off. Well, we think Tesla's the only stock. There's like 15 other ones out there that also trade publicly, and they're just let's say Tesla's a leader. There's other ones, but you'll find them on the scanner list. Now, the big thing that we kind of teach our traders is like, is it too late to jump in? Is it going to continue to go higher? Like, I just saw one person in the chat that said, oh, what about spoofing? First of all, spoofing is illegal, okay? A company can fine millions and millions of dollars for spoofing. Okay, so that was probably the path. So, listen, I don't think a broker cares about going out there and is going to trick you to think like they're going to go one way versus the other. But what you do have to learn is, listen, they could cancel an order just like you. But the big thing that I would try to focus on, and let me tell you, nothing really has changed since the day I started up until probably, till today, other than you don't have to pay $1 million to buy a seat on New York Stock Exchange. You can get this data now for like $15 on the NASDAQ. And, and you basically have a seat on the exchange. So why wouldn't you want that data to know what's out there than, other than focusing on something on the past when you can focus on the future? So I got two examples here, which is called level 3 and level 4. Now, this is not my proprietary trading platform. This is actually NASDAQ. This is the exchange. I'm actually a regular guest on NASDAQ, and you could go on my website. You can see the videos. I'm there regularly. NASDAQ wants you to know how to trade the exchange because now they made it public. You don't have to be a market maker. That's why we're here. We're not market makers anymore because you don't have to be one. Everyone's their own market maker. Go out there and play with it. And I want you guys to see it live in the market. But you could see every buyer. You could see every seller. You could see them at every price level. I mean, think about it. I say this to everybody. We are the ants on the floor. We're just trying to get the crumbs. There are people out there moving thousands, tens, hundreds of thousands of shares. And when you think you have a support level, that support level does not exist unless the buyer's out there to make the support. And when you think you have a resistance level and you're like, oh, this is going to be a resistance and the stock breaks out. Well, did you see if the sellers were out there from the past? Were those sellers getting executed? These are the tools that you have to utilize. Now, we use, listen, you can get on TradeStation, you can get on Thinkorswim, you can get it on Schwab. I mean, every platform does have it. And that's one of the things we also teach our traders, how to set it up and who to deal with. Because remember, let me tell you something. These brokerage firms don't want you to see this stuff because brokerage firms kind of trade against you. They want you to lose. They basically, that's part of it. Listen, it's like this biggest casino. They take the bet. That's what, I mean, if you read the back of your account statements, you hear something called, payment for order flow. You know what I mean? Like you ever think about this? Like, how does a brokerage firm give you free tickets? I mean, Jack and everyone else, remember, we used to pay $20 a ticket. Okay.
You're the
get
product.
Into the trade. Today it's free.
Yeah.
Like where do they make their money? You know what I mean?
Yeah.
Which is okay. It's okay. You just got to know how to play the game. You got to think. Like I'm gonna tell everyone a really funny story. This is what I want you to do after this webinar. Call your brokerage firm and ask them, how do you guys make money? Like, why is a ticket free? Like, could you explain it to me? And trust me, you'll hear 10 different stories. And at the end of the day, they're taking your order, they're making the bet, trading against you. And what I want to show you is something called direct access, which you could actually have a seat on the exchange and you could see your order actually go out there, which is awesome. And I'm going to show you how that works in the trading room. But the big thing I want to kind of invite and teach everybody is this, that there's also level 4 out there where you could see this on a heat map and you could start seeing these orders, how long they've been out there. Are they adding to their position? Like here's an order of a stock. Is a 200,000 share seller out there at 140. I mean, this trader's been there since 9:30. Now here you are. You probably this person over here. Hold on, let me get my crayon so you guys can follow along. You could be this person right here looking to sell it for 700 shares, or this person for 2,000. 200,000? You think you know more than that person? And think about it. How much better and smarter trading decisions would you make if you were able to see these big block orders out there, these big iceberg orders? And not only that, but did that order get executed? Was it a false breakout? Was it a consistency? These are the things that you have to know as a trader that, is it time to get out of it? Did I max out my profit? Listen, you can't go broke taking profits. We all know that. But but the big thing is it's not about that winner. How about that loser? How about knowing if it's going to continue to go lower? How about you're short a stock, or like here's an example of Apple, just getting back to it. This guy got executed at 139. Once that big order got in, you're like, holy crap, how did the stock get to 143 like that in less than an hour? How did it get through this person at 141? How did it get past this person at 142? You ever thought that maybe somebody wanted to buy it? Would you think, listen, there's always buyers and sellers, but being a good trader is to know what your competitor is doing and where he is and seeing if he's out there and if he's getting executed or if he's canceling that trade, because you are the ants. They don't care about you. You're just trying to make a living. You're trying to make what you could do to live. You just really kind of survive. There's not a casino. You don't want to go out there and think you're going for the weekend and, you're going to be doing this for the rest of your life. So being a good trader, you got to know what's out there. And that's what's going to help you to become a better investor and a better trader. Now, like, once again, I'm not want to sit there and bore you with all these examples, but the thing is, like, I want to invite everybody to come to the trading room and see these people, that what they're doing, and see how we work with our traders. And more importantly, don't judge us on the winners, but judge us on how we control our losses. That's everyone's biggest issue that everyone has. I mean, you're here not to like, oh, what's the next best trade? You know what? How about protecting what you already have? How about maybe having a position that you're in and says, you know what? Like everyone here is talking about, market's not going anywhere. Well, how about evaluating, like, maybe I should take a loss right now. You know what I mean? I don't like to take a loss because, listen, didn't work too well for Carvana. Didn't work too well for, for Google and Tesla. Like, damn, I should have sold Tesla at 400. It went all the way to 100. You know what I mean? Like, why didn't I get out? You have to know what the street is doing. You can't. I'm going to teach you something. I'm going to tell you one thing. One of my best mentors always taught me, Frank Farrar, when I first started. He says, Fausto, once you think you know something in the market, you're going to lose all your money. I'm like, how is that possible? Because it doesn't matter what you think. It's what they think. You're trading a few thousand shares. These guys are trading millions. You're not going to beat them, but you could join them. So trading is more of a game. And that's really what it is. You just kind of want to play the game. And to be a good trader, you got to surround with people that trade like you, like anything else. We don't go work for terrible people. We want to work for good companies because that's how you make more money. You work for a shit company, you're not going to go too far. You work for good companies, you do well. So we want you to see our traders and see what it's like to be part of a team, because the big thing is we're going to kind of like teach you, and the best part about it is you're going to teach other people. That's why we're all here, because we've done well, but we still trade, but we like to pass that knowledge down to you. So I'm not looking to sell a program or here's the Fausto indicator or whatever it is. This is basically how the Wall Street trades. And you know what? When you're done, you could teach other people. And listen, I have a lot of people in the industry that are my students. I mean, some people in here, part of our group took my classes 10 years ago. I mean, Jeffrey Termeyer took it. I was with him the other day. He's like, Fausto, I took your class. I obviously went a different route, but I learned a lot from what you're doing, and I kind of used it. So you're going to be able to take it over and over again. So this is all I'm asking. Just take your phone, scan that code, and basically for $9, all I'm asking for is I want to give you 1 week of my trading room, and basically get some videos, get some tutorials, talk to my staff on the phone. When I look into listen, the $9 just tells me you're a real person or not. Listen, if I did it for free, I'll have 5,000 people in a room, and and I know that's just manipulation. That's just basically chaos. We can't talk to everybody. But if you're serious about it, you want to know what it's like to be in the front lines of a Marine and see why we found these stocks. Like right now they're talking about, looks like TCAT's moving in the trading room now. Like how did you find these things that are moving? Here's your opportunity. Listen, the worst thing that could happen is that you learn something and find out it's not for you. But you have to learn a little bit of everything. You should learn a little bit about options. You should learn about stocks. You should learn about Forex. Once you feel that you met that right mentor, that right guru to help you, and you found a good team, that's how you succeed. But I'm just going to tell everybody right now, if you've been doing something for more than 2 to 3 months and you're not making money or you're not getting it, just quit what you're doing and do something else. Because I don't think anybody here would pay somebody a salary to work for them that long and they're not making the money. So in the same aspect, if you're doing something with someone and it's not working out, it doesn't take a year, 2 years. You get it or you don't. And if you just basically, if I just hit a couple of nerves here, it's like, oh, wow, that kind of makes sense. Iceberg orders, big sellers, just get in there and see what it's about. And like I said, if it's not for you, it's not for you. And you know what? As a gift, I'll give you $9 back at the end of the week because I don't need your $9. That's it. I'm also going to throw in my book. So you can go on Amazon, pay $45. I'll give it to you for free. It's a great, quick read that I'll give to you as a bonus. And not only that, but if you do register, I'll even talk to you on the phone, because my goal is this. After you go through the trading room for about a couple of days, I like to talk to you over the phone, and we'll just strategize. And I'll be like almost like your doctor. We're going to do the surgery or we're not. You know what I mean? I don't know you. I don't know what kind of your education you have, what size account. Trading is not for everybody. It's a very big failure rate. It's a 90% failure rate. People blow up their accounts. We don't like seeing it. It's bad for the industry. It's bad for you. So why not just go out there and make a very small investment, just scan it and go from there. And like I said, the worst thing that could happen is that you learn something. All right. That pretty much does it. So anybody have any questions or anything else?
I don't have a question, but I have a comment. I just wanted to say that everything you've said, Fausto, and I've been doing this for 29 years now. Everything you say is 1000% correct. There's something that you said that really got me. So you said it doesn't have to be complicated. And Jack, you're going to love this. I was on the phone last week with a lady. No, this is not a joke. This is serious. And she's telling me about this Elliott Wave program that she's in. She's been in this program for 2 years. She's like, I have a degree in engineering, and the charts and the data and the math that I have to do is more complicated than I had to do in my 4-year program. And according to I'm not going to give any names, but according to the teacher, it takes 2 years to figure out how to read this, how to calculate it. And I'm like, well, so you're saying that it takes you 2 years to do a geometric calculation to figure out if you should be buying or selling? She's like, yeah. And, I have a pretty high IQ. I have a master's degree and I can't get it. I'm like, lady, can't you see the can't you see the, I'm like, this is just insane.
There's nothing to get at that point.
That's insanity. That's insanity. Don't do that. If that sounds like what you're going through, go with what Fausto's doing. Trust me. It's so much better, easier, simpler, and fun. Have fun doing it. It doesn't have to be complicated. You don't have to be reinventing the wheel. Get in with a guy who's been doing. How long have you been doing this, Fausto?
It's been 30 years.
Right. I was like, it's forever.
That started.
Right. Right.
I'm still out there. And listen, the big thing everyone have to realize, if you survive this long, like going through your first crash, like there's a lot of people out there that didn't get through like the first crash or the second crash, like the financial crisis, this and that. If you could survive on the down market and you're still here, that means you're doing something right. You know what I mean? That's the big key, because listen, it's not hard to blow up your account. The only account I ever blew up was when I was 22 years old, because I didn't get educated. And back then I didn't want to go work for somebody and split the profits. But you know what? Splitting it is better than losing it. But it's like you said, like Roger, and like Jack, you work for somebody, you know what it was. Don, you work for somebody. Like you think you could literally just come in here and say, oh, you just show me one cool tool. Let me go out there and try it. And if I like it, then I'll go learn it. Yeah. Let me know how that works out for you. You know what I mean? And it's just, you're just better off just, and like I said, it's like having a job. You think, Jack, they hired you when you were a market maker and you're there for 3 months and you're still like losing the money. Like, listen, dude, you're not getting it. You got to let you go. They're going to take oh no, we're still going to pay you the 6-figure salary and still pay your insurance. No, you're going to go. So you get it or you don't.
I took somebody's job that was losing money like that when I got promoted as a NASDAQ market maker. And she was losing money every month. They canned her. I don't know how you lose money when you're a NASDAQ marker. I really don't, because you got the whole scene right there in front of you. But I want to just tell the folks listening in here one thing. Fausto is the leader in day trading. And if you haven't tried day trading, one of the beautiful things about it is you can do it for an hour. You can do it for 2 hours. You don't have to get fatigued from staring at your computer. And one of the best things is you're done at the end of the day. It's all over. Your hands are clean. You could sleep at night. So, I would just tell everybody on here, do this. It's a great deal. See if it's for you. He's the right guy. You're not going to get a better teacher than Fausto. So, of course, you got $9. Go ahead and do this. I think you're going to love it. You're going to learn something, and you might do it a little bit every day,
Mm-hmm.
Yeah, I think it's great. You you talk about ants getting crumbs, but you can live pretty good off those crumbs because they're pretty big.
You don't need a lot. That's the biggest problem. Yeah. People look at it. They go into trading, and they don't realize it. Like they think 50 cents is a joke, right? They're like, oh, what the hell is 50 cents? You know what 50 cents on 1,000 shares is? That, 50 cents on 1,000, $500. That's $100,000 a year salary. One thing that bothers me, I hate, like, one of the big things we don't talk about in our trading room, we don't talk about money, because first of all, I don't like egos. I don't like people bragging, and not only that, but it's kind of hard to teach somebody to start at 100 shares to get to the 1,000. So you don't want someone to feel discouraged that they're not going to contribute. So you want to feel good, like, wow, I'm making money. It's like, starting out, like, you got to start small, like anything else. In fact, they didn't give you a big account to trade in the beginning. They said, let's see you on demo mode, and then we'll give you a couple. Let's do 100 shares. Like, I'm getting this. Like, no, you're not. You didn't lose money. The best lesson you'll learn in trading is losing, because losing is a good thing, because if you know why you did it, you're not going to do it again. But if you can't figure that out, you're going to lose. But you just got to you don't got to kill it. And one thing that bothers me, like, and by the way, if you start hearing these people talking on TV, oh, my next $1 million trader, take a $50,000, a $2,000 account to $1 million account 6 months, do yourself a favor, run as far as you can. Okay, run as far as you can. First of all, you can't say that, and secondly, you know what? If it's so great, why is he doing it? You know what I mean? Like, everybody just wants to take care of their IRAs. They want to be able to live. We just want to survive. Replace our our income, whatever it is, or just supplemental. But you don't have to make a killing to be a very successful trader. And that's one of the big things I want to kind of show you. And when you meet these people in the trading room, listen, we care about you. They all care about you. They want you to succeed, because you know what? If you get it, you're going to give good content, and you're all going to make money together, and we all look out for each other. Because if you don't, we kick you out, and it's just like a bad employee. We're not going to have somebody in the room that is an egotistical, cocky, whatever it is. And you want to be a person like that. And that's why we had that conversation. But try it out for $9. What do you got to lose? All right.
Awesome. Excellent. Fausto, appreciate it, man. This is great. Hey, thank you, everybody, for coming today. This is a great session today. Great talk. We've been at this thing an hour. It's awesome.
What a great
everybody
session.
Go out there.
I was going to say, what a great session. We never go this long, and it felt like 5 minutes. I mean, it was just a great, I don't know if you guys felt the same way, but this was just a great session. Thank you so much, Don. You were a fantastic host. Hats off to you. Great session. Great hearing from you, Fausto, and Jack as well.
Thanks for having me, guys. I look forward. It was great talking to all of you. And what's great is that when we all kind of the same mold of type of traders, we all think the same because we've been through it. And, like I said, we just want to protect everyone else from not making the same mistakes that we've made. And, that's why we always give back.
Love it, guys. This has been awesome. We'll see everybody next week. Make sure you join Fausto's thing. $9. You got to do it. I am incredibly curious about this. After So's came on, I went a different direction. Fausto went all in, and he understands it in and out for sure. So
he's one of the original So's bandits. Remember that? The So's bandits?
Yes, I do. So's bandits, small order execution guys. It's amazing, and there's a lot of money in it too. So awesome. Okay, guys. Fausto, appreciate it. Jack, Roger, it's been great.
Bye, guys. Take care. Have a great week.
Have a good one, guys.
Bye.